Okay, everyone, it's time. It is time to talk about the entry model. We have everything we need in order to become profitable. We'll talk about psychology very, very soon, but we have everything we need in order to become profitable. The most important thing right now is to actually put things into practice. We will talk about the practice a little bit after I show you a couple of entry models. Well, I'll show you two entry models that are everything you might need, and then I'll show you how you can test those entry models and how you can forecast for those entry models. Now, when it comes to this video, in terms of executing trades, it will be divided into three parts. This part is going to be just a how do you call it? This is just going to be theory, and I'll show you 6 examples in total. But then I actually want to show you examples in the market, right? We will afterwards, in the part 2 and part 3, we will go into the charts and we will actually be watching trades that played out or that are playing out. And I'll show you forecasts, I'll show you everything. But right now, let's talk about the entry model. So let's start off with a reversal. Now, our reversals are not the reversals that you are thinking about, because our reversals, let's say, a lot of traders, what they do, let me just check if everything is okay. Okay, so a lot of people's reversals, what they do is that as the daily, so imagine that this is the daily, right? As the daily is moving to the downside, people are trying to catch this low for this pullback, and then they can continue taking loss and loss and loss and loss. So our reversal is not a typical reversal. Our reversal is not a bottom tick. It's not a limit order at a 4-hour fair value gap. It can be, by the way. But again, then there it wouldn't be a reversal. But our reversal is, for example, let's say that we are bearish, and now we have printed a bearish day. So now you expect the market to move towards these lows, right? You expect the market to move towards these lows. That means that you are going to want to zoom in here, wait for the market to move up. That's the power of 3. Wait for London session to start or New York session to start. Move up, power of 3 on the session. You want to see the market shift on the 5-minute or on the 15-minute in line with our direction, and then execute on the market to the downside, right? So you'll have this. This is going to be our reversal entry right there. And then as the market moves lower and gives you the confirmation that this high is the high that takes place, this is going to be what we are going to call the continuation entry, right? So we will have 1 entry, 2 entries. That is exactly what we are going to have in this. So it's important to understand that when I say reversal, I'm not talking about calling this high. I'm not talking about calling this high. I'm talking about waiting for the market to show us where the high is and then moving in the direction that we expect it to be. That's when we set our limit entries or our market orders. So what we will need for this is what we already talked about here, which is the daily bias, the power of 3, the session liquidity, and the market shift, right? Those are the things that we want. Then we are going to enter on the fair value gaps. Now I might say, Kimmel, but this looks weird. Well, yeah, maybe I don't know how to do flowcharts. I don't even know if this is a flowchart, but whatever. So the confluences are this. Trade in line with the daily bias. Wait for the market to move against the daily bias. London, wait for the market to sweep the Frankfurt higher low. And I forgot to actually have here New York. Wait for the market to sweep London high or low. And then wait for a market shift in line with the daily bias. And that's when you enter on the fair value gap. Now, why are these lines here? Because when I say that we need the daily bias, I mean trade in line with the daily bias, right? So trade in line with the daily bias. Then wait for the market to move against the daily bias, which means if your bias is bearish, you want to see the market moving up. Why is that? Because everyone that longed as soon as the market opened is making money. You don't want everyone to be making money. You want everyone to be losing money, basically, right? So you want all of the shorts to be losing money until they get taken out. That's the power of three. Wait for the market to move against the daily bias. Then session liquidity. There's going to be, for example, Asia highs right here. So let's say that this is the market open. There's going to be Asia highs. This is where the stops of everyone that's shorted are. So once these stops get filled and all of the breakout traders are in, you now have session liquidity because all of the traders are getting trapped. All of the traders are getting trapped in the power of three. That's exactly what we want. Exactly what we want. And then you wait for a market shift in line with the daily bias. So again, our bias is bearish. We have bullish manipulation. So right now, the market is looking something like this. The candle is looking something like this. And what do you want? You want, if your bias is bearish, you want your candle to look something like this, right? So with that being said, you wait for a market shift in line with the daily bias, and then you are going to enter on the fair value gap. Now, in terms of entries, let's look at some examples. So we have daily open right here. The market instantly moves to the downside. So all of the longs right here are already getting absolutely cooked. They're getting absolutely trashed, right? Then we have Asia range. After the Asia range, what do we have? An impulse lower after Frankfurt open to sweep all of these lows. So everyone that longed Frankfurt open is taking a loss. Everyone that longed during Asia is taking a loss. So everyone that longed as soon as the market opened is taking a loss. And because of that, this is all of the liquidity you need so that when we have this market shift, now, yes, the entry is here, but actually your entry would be here. As soon as we have this market shift right here, this is a trade that you take and it goes to take profit towards the daily targets. We'll talk about targets a little bit after. Because again, yes, you can target the highs, very, very easy target. But if you want a little bit of a higher risk reward, what you do is on the daily, you check what the next target is. Because don't forget, market structure doesn't say that the market stops here. It always goes a little bit more. But we'll talk about targets a little bit after. So, once again, what did we have? Trade in line with the daily bias. Check. Wait for the market to move against the daily bias. Check. London, wait for the market to sweep. Check. Sorry, this is also Asia / Asia. Asia. Okay. We have that. And we also have the market shift in line with the daily bias. Let's look at the next one. The next one. Market open. Range. Look at all of this liquidity that is being built up. Liquidity. The market goes extremely lower, sweeps everyone out. So everyone that longed, as soon as the market opened, is at a loss. Everyone that longed here is at a loss. Everyone that longed here, which is Asia session, is at a loss. Everyone that longed here, which is London session and New York session, is at a loss. This is New York session. This is going to be London session around here, right? So all of these traders are at a loss. Big move lower, grabs all of the liquidity. If this is not a liquidity sweep, I don't know what is. The market moves higher, gives you the market shift, but notice how right here, you don't have a fair value gap yet, right? You don't yet have a fair value gap. So you wait for the fair value gap to be created. The market pulls back to it. You enter. You can have your stop loss when you have this big of a liquidity sweep. Your stop loss can be a little bit smaller, but I want to give you examples of where we don't really care about risk to reward, right? This is still a 1 to 1.7. So, right, 1 to 1.7. There's still a great risk to reward. But I'm just saying that if you wanted to aim for that 1 to 2 for some reason, that you could, right? So, again, let's go back. Trade in line with the daily bias. Check. Wait for the market to move against the daily bias. Check. Wait for the sweep. Check. Wait for the market to shift in line with the daily bias. Check. Right? We have everything. Really nice trade. Let's go on to the next one. So daily open. Right here. Right? This is the daily open. Power of 3 happening right there. Now, power of 3 on the session. Right here. Opens. This is Frankfurt high. Sweep of the Frankfurt high. Right? Then, notice. Boom, boom. Market shift. Right there. Fair value gap. And the market starts moving to the downside. And we'll see that there's another trade right here, which is going to be the continuation trade. But, let's go back. Trade in line with the daily bias. Check. Wait for the market to move against the daily bias. Check. London, wait for the market to sweep Frankfurt high or low. Check. Wait for the market to shift in line with the daily bias. Check. Right? Everything has been there. And by the way, oh my God, I deleted all of the things that I wrote down there. Okay. So I'll do that again. And you guys can check this in the first link in the description. And by the way, you enter in one winning trade and you're out, right? Activate trade blocker. No need to stare at the charts anymore, right? That's the thing you have to do. You can't, if you enter in one winning trade, just move on. It's like you've taken a winning trade. Don't look for another. Like wait for the next day, right? Everyone wants to have one more winning trade, one more winning trade, one more winning trade. You should be extremely happy if you take one winning trade in a day. You just did what the market does not want you to do. The market doesn't want you to win, and you just won, right? So let's go now onto the continuation one. Daily bias, power of 3, session liquidity, market shift. All of these still apply. But in this case, where we have the first reversal trade, we're going to wait for 2 market shifts, right? So that's when we are going to take the trade on the second market shift. And then the entry is going to be on the fair value gap. So the confluences are trade in line with the daily bias. Wait for the market to move against the daily bias. London, wait for the market to sweep Frankfurt high or low. So Frankfurt / Asia, high or low. And wait for the market to shift in line with the daily bias. And then, last but not least, I forgot to add this. So, just get this here. Wait for the second market shift, confirming that the high is in the high or low are in place, right? So you will wait for your second market shift, which will confirm that the high is in place. And that's when we have the entry on the fair value gap. Let's look at some examples. So bias is bearish. Power of 3 is bullish. We move lower. We have our first market shift. This would be your simple entry. But let's say you don't enter on that one. You would have this next one right here. That's another entry. But I did not want to have this one because it's quite aggressive. I want to show you one where you can take your time with a continuation entry. The market gives you a lot of opportunity. So, market moves higher. Session liquidity is done. Sweep the high. Market shift, market shift, market shift. Fair value gap right there. Market taps it and moves to the downside towards the target for a really nice 1 to 2. So, trade in line with the daily bias. Check. Wait for the market to move against the daily bias. Check. London, wait for the market to sweep Frankfurt. Well, basically session liquidity. Yes. Check. Wait for the market to shift in line with the daily bias. Check. Wait for the second market shift, confirming that the high or low are in place. Check. Right? We have everything. And these trades, look at how simple these trades are. right? You do not have to overcomplicate trading. These trades are not complicated. Why would you want a complicated trade either way? I've never liked complicated trades. Doesn't make any sense. So, next example. Daily bias is bearish. We have the move higher. Do you recognize this trade? We have the move higher. Power of 3, bullish. Session liquidity, taken. Market shift. Oh, that's our first trade. That's your first entry. Market moves lower. Creates another fair value gap. That's your next entry. This is the continuation trade, right? So that's when the market moves to the downside. Again, you still have a nice 1 to 1.5. So, in line with the daily bias. Check. Wait for the market to move against the daily bias. Check. Wait for the market to sweep session liquidity. Yes. Wait for a market shift in line with the daily bias. Yes. Wait for the second market shift confirming the high or low are in place. Yes. Everything is done. Last one. And then we'll jump into some chart examples. More. Power of 3. Yes. Session liquidity. Yes. Market shift. Yes. Confirmation. Yes. Fair value gap. Yes. Entry. Yes. Take profit. Yes. So can you see? We have everything. The trades do not have to be complicated, right? The trades do not have to be complicated. So many people are trying to overcomplicate trading. Trading is not complicated. All of these trades are simple. They are based on everything that I've told you about. The daily bias, the power of 3, session liquidity, and market shift. Daily bias, you want to trade in line with the daily. That's where most of the momentum is. Power of 3, you want the traders to get out of the market before you are in the market. You want institutions in, traders out. Session liquidity, that's when you will see when people's stop losses are getting hit. That's when you see that people are losing money in the markets. That's what session liquidity is here for. The market shift, that's when everyone is out and you are now going to be in. Right? So that is basically it. I hope you enjoyed. Make sure to backtest this. We'll talk about backtesting. We'll talk about forecasting. We'll talk about a specific exercise that I really, really like in future episodes. So this is just an introduction into our entry model. Now, tomorrow, we'll see way more examples. So with that being said, I will see you all tomorrow. Make sure to check TradeBlocker out.